All right. I welcome you all here. Um, I don't know how your week has been so far, but for me, it has been a crazy one, right? And I just want to show us a few things that can, help us psychologically, because I honestly feel this week has already been messed up already. I think it's from last week. We've been on this long losing streak, which is something that one should not be proud of, right? Um, from last week, I myself, I have been, I don't know if it is overconfident or I can't really say. But then let's fish out what exactly is happening in the market. Somebody shared me with some trades. Let me see if I can get that. Um, mm, okay. Let me get the exact pair and think this one is the pair is not showing like the name of the pair. Oh, German 40. German 40. I honestly do not trade those high volatile pairs, but let's look at some kind of pairs. Let's look at some new pairs. Let's look at let's look at GBP USD. Why we have a controversial or a possible upward movement, and then it turned out to be a downward movement and all of that. So from the monthly, I think from last month closed um bearish, which means we are supposed to be getting some move to the downside, right? And if we look at it closely, this was my mistake. And I think this is also some mistake that some of us would have made, last week and this week. Now, as you can see here, we have this high being taken out to another one here, which means we have a new high. This one has been taken. Internal range liquidity has been swept, and the market has maybe for some reason triggered here, and we should expect a move to the downside, right? But before seeing this one, we have this one here now, which means that we was hoping that the market, this low was taken, this particular low, let me put that here. This particular low was taken, and we are expecting the market to come to this high, right? Then this one happened last month. Now we was thinking that the market would continue and maybe get to a point here. If we look at this, if we observe this very well, we'd see that the market did not get to its intended direction, which means that we are supposed to see some kind of reaction, or before this drop to the downside, we're supposed to see it here. If we look closely, we would see that the market did not get to that point. EU, GU, NZD, USD, those pairs that have the USD pairs have just been misbehaving, right? Except we want to go to the Asian pairs, and sometimes they also misbehave too. Now, I took my time to study these pairs, and I see that, look at this one, it didn't trigger here. Now we are supposed to see something maybe activate here before going to the down and maybe coming down to take out this one, right? So we have some kind of movement that are, not sure. Even sometimes we'll see a break of structure on a lower time frame, and the market will still disrespect it and move to the opposite direction. What do I mean by that? Now look at this one. We have this taken out, right? First of all, we have this because before this candle was printed, we have this one, right? And we're expecting the market to take out this one, which the market did, right? The market did take out this low, And then we saw something like this. So after this one, we have this one, which we was waiting for the market to come to this point to take out this high, because we've seen this one taken out. We want the market to take out this one, right? Now, by the course of taking out this one, it will activate here and just take out this one and continue to the downside. But unfortunately for us, it did not. Remember, this is a monthly time frame. Now, I also want to explain the concept of time frames and how to break them down. Now, this time frame, this particular monthly candle will take approximately 1 full month before a candle would open and close, right? If it open on first, like this one opened on 1st of October, and it will definitely close on 30 or 31st of October. So this would take 1 full month before we can get the full body of the candle or the full whatever thing. So if we are expecting the market to come down here, then this will take 1 full month. But why are we coming to this 1 month time frame? Is for us to get some kind of insights that will lead us, that we would subject everything to a lower time frame. I don't know if that makes sense. So we go to the monthly time frame and we see everything that was printed here. So last week I did a lot of mistakes because I didn't go through the monthly time frame. I stopped at the weekly, sometimes daily. I just want to, get some movement. But the overall movement, you can see that there is a confusion here, right? This was respected because this took this one and we're expecting it to come to this, and it's respected it. So let's take this one out and this one out, right? Let me take all of this out. Let me take all of this out so that we'll understand where we're going, right? So basically, we took this low out and we're expecting the market to come and take this high out, right? And now what happened? The market came, this new month opened, which is September. We are supposed to get activated here, but unfortunately we did not, best known to the market, right? Now that we have this one like this, now it has given us some new confirmation that we have this, and we are expecting the market to come here, right? So this is our internal range liquidity that has been taken, and this is our external range liquidity, right? So let me take this one out. Now, remember, this one did not trigger on the monthly time frame. It does not mean that it won't trigger on the weekly time frame. Now, look at what the market wants to do. The market wants to do something like this. If it comes down here, maybe activate somewhere here and continue to take this one out. So pay close attention to what I just drew here. So the market will just come down, take this one, because we have two liquidities resting below here, and we have an open close candle that was, validated, right? It got broken with a bullish engulfing that this point is supposed to be respected, but then we have something like that. And even if this point is also supposed to be respected because we have a liquidity here, and this place is supposed to sell, but then it got broken to the upside too, right? So we have this as a liquidity, and we want to expect the market to buy to the upside. So let's put that in check. Now that we have this sorted out, we want to go to the lower time frame to see what the market is doing, which is the weekly time frame. So now we don't want to confuse ourselves. We just want to focus on this one, right? This took out this low, creating new high, which activated here, and want to sell to this point, and maybe from here we can buy to the upside. So we should be expecting a buy here. So let's go to the weekly time frame and, see what exactly the market is doing. So as you can see here, we have this point still needs to be respected. And on the weekly time frame, it got activated. Remember, on the monthly time frame, we had issues with the monthly time frame because it did not get to our key level. If we go back to the monthly time frame and we switch it back to this, we can see on the monthly time frame it did not gets activated, right? So we should understand that part. But it is not every time that the market would get triggered on a particular time frame. If you go to a lower time frame, you would see some possible buys or sells. So as you can see here, it got activated here, and we have this point as a place where we can definitely buy from, where the market is likely to, stop selling and continue its buy. So if we look at this point, we'll see that we have a liquidity, right? Which I think it's the SMC traders, they call this the double bottom, right? And double bottom simply means for buys, right? So now this place serve as a liquidity. Then they would want to buy here, and the market will just take them out a little bit and continue to the upside, right? Okay, so now we have this as our high, and this as where we want to take our profits. All right, but it is this point, not that place I marked. It is here that we're taking our profit from. But here and here, what's the difference? It is a lot of difference because this is the weekly time frame. So we just want to take from here and delete this one so we don't get confused. Delete this one too, right? And take out this one. So we have this and this, right? On the monthly time frame, we've seen took out this low, and we want to take out this high. We want to take out this low. So we want to go to the daily time frame to see what the market is doing. So from the daily time frame, we can see that we have took out this. So for every time frame that we move in, we want to adjust whatever any of our tools that we're using to, suit the exact place, because some kind of key level that you see on a monthly or on a weekly time frame might not tally with the daily time frame, right? A daily time frame, it might be a little bit lower. The weekly time frame, it might be a little bit higher, and it goes that way. So the essence of going lower to a lower time frame is for you to get a tighter stop loss, right? So what you see here on a daily time frame, if you go to the 4-hour time frame, this key level might reduce to this place, right? So yeah. So now that we have seen all of this, so what do we want to see? We want to go to our line chart. Remember, the line chart is our friend. Now, looking at the candlestick formation, we can see that we have yes, day before yesterday was bearish. This one was bearish. This one was bearish, right? Now, what is the significant thing that we see here? We can see that the market activated from here, and normally, if we are to take our profit, we'll take our profit from this point. But overall, for the monthly time frame, we are expecting the market to come here, right? But will it come to that place for today? I don't think so, because the whole concept is to move till the month runs out, right? So it will take 1 full month for the market to come here, or the market might just come down and go up to take out that empty liquidity that needs to be taken at the top of the monthly time frame, the one I marked that didn't trigger, but it triggered on the weekly time frame, right? Right. So now we have something like this on the daily time frame. Bearish, bearish, bearish. So we should look for our entry, right? We already know that we want to sell, right? That's the essence of, going to a lower time frame. The lower time frame monthly is bearish, weekly is bearish, and daily is bearish. Let's go to the 4-hour time frame and see if it is also bearish. So as we can see here, the 4-hour time frame, it's also bearish too, because we have markets breaking structures to the downside. As we can see, we have this break of structure, and it goes that way, right? Which means that the monthly is in sync with the weekly, is in sync with the daily, is in sync with the 4-hour, and it goes that way, right? And if we go anything lower, we also want to see that everything is bearish for real, right? Now we are at On the 4-hour time frame, we want to look for our formation, our entry model. Now, the one thing is to understand the movement of the market, where the market is actually going. And another thing is to get your entry point. Where are you entering from? Right? So now that we have this one, this market triggered here, remember whenever we go to a time frame lower, we want to see what exactly the market is doing. So on the 4-hour time frame, we can see that the market triggered from here. And remember, these are liquidities. These are liquidities. Here we have higher high here, higher low here, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, and we have a lower low here. So these are all liquidity, which the market is likely to maybe take out this low, trigger here, or trigger here, and continue its move to the downside. So that is just how the market moves basically, right? It will take out this low, do something like this, then break to the upside and take out all of this. Remember, all these are liquidity, right? So, and continue to the upside, then trigger here. And because we have an imbalance here, and what does the market do? Rebalance an old imbalance, right? There is from here, let me draw that out. From this point, oh shit. Okay. We have some imbalance here. We have imbalances here, and we have a beautiful QM here where the market needs to come and trigger, right? And by the reason of this imbalances, the market is likely to come there and just to save us our liquidity, right? And yeah, our stop loss above here a little bit, and then boom to the downside, right? But then for now, we want to see what exactly the market is doing, right? So we want to go to the hourly time frame, 1 hour, and see what exactly the market is doing. So 1 hour. Remember, these are liquidity, so I just want us to have that in mind, right? So now on this particular time frame, what can we see? Now this is a key level. This is a key level that got disrespected. Let me take this one out. This is another key level that got disrespected, right? So we'll go to this time frame, and what can we see? We can see that the market respected this key level that got disrespected. What can we see? The market is supposed to buy from here. The market is supposed to buy from here, but unfortunately, it broke to the downside, came, respected this, broke it to the downside again. Hence, this point is a point of concern, right? Is a point of concern. Hence, the markets took this as a buy. Why didn't it get to this point? Why didn't it get to this point? This point is a point of concern, right? Hence, it's selling from there. Do we understand that? Do we understand that? Do we understand that? Is it hard? Is this okay hard? Okay. Do we understand it? Demola, do you understand it? Okay. So now, some persons get this thing wrong, right? Now that we've gotten something like this, so SLK is very logical, is very, very logical. Now on the 2 hour time frame, let's go to the 2 hour time frame and see what happened here. I'll still show us something. I'll still show us something, re-entry. You know, some of us, we don't pay attention. When Dixon was teaching us, continuation, reversal, and I don't know, I've forgotten the last one. Some of us just skipped it, right? We just lock up based on, you don't really concern me, right? But it go concern you. It go really, really concern you. Because if you don't know him, you don't know him. So now that we have something like this, now, some persons, they mistake this as when they will be entering their trade all the time. Why? Why? Some of you mistake this as when you will be entering your trade all the time. Why? And if they enter from here, let's say this one, this is a key level, but there is a wick here. Maybe the candle, you know, line chart only shows the body of the candle. And let's say the wick is like as long as this, then they will not enter their trade from here and put their stop loss here. You're supposed to protect this point. Your stop loss is supposed to be lower than this place because the market might just come, and so your stop loss is supposed to be maybe a pip or 2 pips lower, right? This is where you enter though. If you want to be, you know, if you want to focus on this particular model of entry, but your stop loss needs to be lower than the wick, right? Your stop loss needs to fill all of this place. Then this is where you take your TP. Your stop loss here, your TP here. Now, this particular entry is when the market is coming down. It is called the algo market structure. Now, it is for the advanced traders. Let me show you something. Let me show you something. See, this is for when the market, let's say the market is ranging, right, on a lower time frame, and it wants to change from coming down to going up. Now, what do you want to see first? You want to see something like this, right? Which means this has lure people to thinking that this market is still respecting this high, right? And it wants to sell. But then the market will break and give this one, which means it has confused you for selling and also confused you for buying too. Now, this point now become a place of concern. The last point, it happens with when the market is also buying too. Because here, it broke structure to the upside. You want to buy from here, but the market broke, and this point now become a point that you want to sell from. Now, that is when the market is, right? And when the market is ranging to the upside, when the market is going to the upside, that is when this point would be valid for you. When the market is going to the upside and you see a break of structure to the downside, it is, the market is, you know, the original movement is to the upside, but then it broke to the downside. It means that this point is a point of concern, right? Initially, that's your first move. But for continuation setup, let's say this is, let me show us an example. Now, let me show us something. Now look at this trade now. This market was coming down, right? And then let me go to 30 minutes where we can see that the market was actually coming down. Then it moved to the upside. Now look at this point now. Look at this. This market was coming down, right? Down, right? Now, we now saw something like this. No, let me show something. See, this market was going up, as you can see from here. Let me show us. high, low. Oh, that was bad. Okay. So now, high, low, high, low, high, low. Fake out, right? High, low, high, low, high, low, high, then low. This is whatever it is, right? Then high, low, and we have, you know, this, this, this. This is your last high. Let me delete that. This is broke structure to the upside, still came down, broke this structure because this was your last structure, right? Broke structure to the downside. Now, so this point now is a range circle from going up to coming down. Do we understand? So this scenario can only be used when the market is, or that is when you can consider this place as a place to buy. And if you're even considering this point as a place to buy, the low should be protected. The low should be protected. If you cannot wait, maybe you enter instant market execution, then you wait for the market to do all its reaction, then you look for re-entry and enter. Or you wait for the market, or you choose this last low because we have one, 2, and 3 entry, right? So it's either you take this one as the normal one that we do enter from, or you wait for this last one so that you would put your stop loss at the low of the week here. Do we get that? Let's say we have something like this. Remember, we have 1 entry, 2 entry, right? Now, if you want to enter from this entry, the normal one that we, that we do entry, algo market structure, right? It is just, that's not the actual name, but we just know it as algo market structure, right? So now, or some persons call it advanced market structure, which normally there is nothing like that, but we just want to believe that that's the advanced market structure. Okay, now, if we want to enter from here, your stop loss should be at the low of the week, right? Because there is also an entry here. We have 1 entry, 2 entry, and the low of the week, right? So, because if you go to a lower time frame, the low of the week can also have a key level there. If you go to a lower time frame, right? So now your stop loss should be at the low of the week. Do we understand? So this one is for let's say, a movement that wants to start. This is an uptrend. This movement wants to start. It broke with the body of the candle. It broke this one with the body of the candle, then came down here, broke this one to the downside. Or let's even say, okay, we want to use this week, broke it to the downside. Then this point now is a point of concern that the markets will definitely come there and, trigger from, right? That is the first move of the market, which is this one. Now, for here, now, do you want to look for algo market structure here for re-entry? No, you will not look for algo market structure there because this one now will now be a continuation setup. Do we understand? This point now will now be a continuation setup. You don't expect to see that algo structure, whatever here. It goes that way. Look at this one now. This one now triggered here, right? Triggered here. It continues that way. It goes and boom, 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 boom to the downside, right? As far as this thing keep breaking structure to the downside, you know that you're still on the downside. Then boom, this one broke structure. This one did not broke structure to the downside, but then we have this point and it continues to the downside. Look at here, it continues to the downside and to the downside. But if you was expecting that everywhere, that means you will not see an entry. You will not see any opportunities to enter, right? So you don't have to, it's not every time you just be looking for the algo market structure everywhere because Your mentor told you, oh, to enter from the algo market structure. It is only for when the market wants to change from maybe going down to going up. I hope that explains it. Right? So now look at this one. Some persons will be waiting for this place. Algo market structure. You enter from the neckline. Look at it. It did not come. Some of you missed this trade. Right? Then continuation entries are the ones that, you have to enter from some key levels that was, violated before, and, all of that. So look at this one now. Look at this one, key level. How do you know it is this place? You might not know because you're focusing on only this one. If you focus on this one now, the entry did not enter. Then if you say you want to enter from this one, where is another one? You want to call this one your key level or your entry point, it still do not get to that point. So it is for an initial movement at first when market wants to change from going up to coming down. It is just as easy as that. Do we get that? Do we get that? Remember, we're hoping for the market to take out this low, and then we see from the daily time frame, we marked out all of these things. So we're hoping for the market to take out this low, and then we'll now see if there will be a pump to the upside, and maybe we want to enter from, like, look at this one now. Look at this point. Look at this point. This is a move to the upside, as we can see here. Here we have, let me use here we have low, high, low, high, low. It broke it, right? And then the market has not come there. So we want to see something like this. Continue to the downside, or from here, continue to the upside to go and take out this, to go and activate at where it is supposed to activate. I hope this is not a lot. Do we understand? Do we get that? Continuation, reversal, and expansion. Yes. Some of you did not even see that video, safe. Some of you did not see that video, which is really, really wrong. Re-entry. Did you get? Yes. So that is it for today's class. And what else? What else? What else? What else? What else? What else? What else do I want to show you guys? What else do I want to show you guys? Do we get that? Yeah. Okay. I'll see you guys in the next one.